Good morning. Good morning, professionals you trust. My name is Leslie McFadden, and I have the privilege today of introducing our presenter, Tina Mitchell with Highlands Mortgage. Tina was asked to answer 3 questions so that we could get to know her a little bit better. The first question is, who is someone you look up to? Today, her answer, today, I would have to say the president of the Ukraine and his people for sharing their stories with us. You never know how strong you are until you are tested at the level they have been, to fight for what they believe in, to fight for their country. It's a beautiful answer. Our second question we asked her is, what's your favorite book? Her answer, the first book I read when I started my professional career in May of 1995, Who Moved My Cheese by Spencer Johnson. Your first book, if it had an impact, is like your first love. It will always be special. It's a short, lighthearted parable about change. It follows the physical and emotional journeys of 4 characters, Sniff, Scurry, Hem, and Haw, as they search, find, and lose, and must rediscover their favorite food, cheese, in a large, twisted maze. The cheese is a metaphor for what you want in life and the importance of being willing to change and change others. The third question we asked her to answer was, describe your dream holiday if money were no limit. Well, I can't wait to hear this. Her answer, if money and time had no limit, my dream vacation would be to take a year off and travel the world. I have been to a lot of amazing places, but having the time to experience and embrace many cultures in one trip would be my dream vacation. When I am ready to slow down, I will take this vacation. Everyone welcome Tina Mitchell.
Thank you. And a little typo in the question. It's not change others, change often. My cheese, big difference in, because you can't change others. You can only change yourself.
Oh, I was doing so well.
Well, it's my fault. It was a typo for sure. All right. Good morning. Tina Mitchell here, your local mortgage expert, over a quarter century in the mortgage industry. Today, I would like to walk you through the process from introduction to close. Now, before I get into my process, I would like to describe the difference between a bank, broker, and a correspondent lender. First, a banker. A banker works for one bank. Bank of America, Wells Fargo, many different ones to choose from. The disadvantage of working for a bank is you have one product. The other disadvantage is the bank does not focus on mortgages. They focus on banking. The mortgage division is actually an inconvenience, which means that they don't provide a high level of service. I speak from experience because I worked for Wells Fargo in my first part of my career. Then you have a broker. A broker works with multiple banks. So the disadvantage of a broker is they have absolutely no control. They have multiple banks to choose from. However, during the process, they're not underwriting, they're not drawing docs, they're not doing anything themselves, which means that they're depending on that bank to actually perform at a high level, which I've already shared. They don't. Their major focus is on money, their banking system, not their mortgage division or their correspondent division. And then you have a correspondent lender, which I figured out very early in my career, this is where I would be. And I've been here for my entire career. A correspondent lender has the benefit of both banker and broker. I have access to multiple banks to choose from, which gives me multiple programs and competitive interest rates to look at. And then also we have complete control. As a correspondent lender, you have a level up from a broker because you draw your own docs, you underwrite the loan, you fund the loan, you do everything within house, and then it gets sold to the bank that you chose that would best fit your client's needs. So why would a mortgage professional work for a bank? Because they get leads. They don't have to generate their own business. That's why. Why would a mortgage consultant work for a broker? Because they make more money. You get paid higher commission working from a broker than you do surely a bank or a correspondent lender. So why would I choose to work for a correspondent lender? No leads, and I make less money. Because I generate my own business and I need to have the highest level of service that's available in the industry, which I'll share with you today. So I thought that would be a good place to start out. So as you can see, as a correspondent lender, it is the best option to be at, and it allows me to provide the best quality of service to my clients. Now, My process. When you make an introduction, the best way of sending an introduction is a three-way email. It gives me the opportunity to respond back with my online calendar, so it's convenient for your introduction to schedule a time that works well for them. Usually I have availability within 48 hours of that introduction. I have availability after business hours as well on the weekend. Now, once they schedule their consultation, they receive an email that gives them next steps to prepare for that consultation. And that's my online loan application. By completing that, it allows me to be better prepared for the consultation. Now, there is a disclosure within the dialogue that if they don't complete the online application, because I want to pull that out, they haven't met with me yet, they know it's going to be pulling a credit report, they can just go ahead and provide the verbal information, and I let them know what that would be. Majority of, I would say 90% complete the online application first, and that's because of where the referral source is coming from. Now, my consultations are 1 hour. In this meeting, I'll review their application to ensure accuracy. Very critically important. I'm going to talk about that a little bit later. Discuss the amount they will approve for once they provide the supporting documentation. Review all of the loan options that are available to them. Today's interest rates, how to best prepare for the real estate market, the why behind what's happening with interest rates. There's a lot happening. So you need to have an experienced mortgage professional that knows how to navigate through that conversation. Now, when reviewing loan options, I generate them through the mortgage software that I created 11 years ago. I hired a developing team to build out Mortgage Triangle software that's available for other mortgage consultants nationwide. And I am founder and owner of the software. There was nothing available on the market to easily compare options or to run my process. So I just had to go out and create my own. This definitely shows my commitment to education. Now, my software also manages the closing milestones that I'm going to share with you a little bit later in my presentation. Now, when educating clients on numbers, it's important for the mortgage consultant to discuss their maximum but also their personal payment objective. Most clients are going to approve for much more than they want to purchase. I will ask what their target price and target payment is. An example, they want to purchase a home for $900,000. They're doing a 10% down and their payment objective is $4,500 a month. Well, right now, based on where interest rates are at, every $10,000 in a purchase price with a 10% down payment is about $57 a month. So if you do the math, a $4,500 mortgage payment would purchase them a $790,000 home. A $900,000 home, their payment would be $5,130. Now, in this situation, as most, they're going to approve for more than $900,000. But if I show them what they're going to approve from, I've lost them, because it can be kind of insulting when you tell them they can approve for a $6,000 a month mortgage payment and they feel comfortable with a $4,500 mortgage payment. So then I have a conversation around budgeting. There is always ways to lower their outgoing cash. I need to show them how they can adjust $630 a month so that they can get closer to their own personal target price and keep within their target payment. And I will say most of my clients end up going more than what they originally say that their maximum payment that they feel comfortable making on a monthly basis. All right, and I wrap up my consultations with how I can help them win in today's very competitive seller's market. Most lenders have challenging times closing in 30 days, especially banks. They commit to doing it, but they close early, which, by the way, risks earnest money. It's a big mistake that can happen in the industry. I can close in 2 weeks. And when I say I can close in 2 weeks, that's exactly what we do. I also share my $10,000 seller financing guarantee, which I've mentioned to you before, but I want to bring it up here. I have just increased this recently from $5,000, which I've had for 7 years, to $10,000. This is not a Highlands residential mortgage guarantee. It's a personal guarantee of mine. Why? Because I want to make sure that I'm helping my clients be more competitive in a very competitive market. Also, 30% of mortgages fall through because of financing. I want to make sure when the listing agent is looking at my offer, they know we're not going to be in that 30% that fall through, because I'm saying I would pay the seller $10,000. Now, what makes this guarantee really unique, and let me click on the certificate, it looks prettier. This is the second page of their pre-approval letter. This is what makes my guarantee very unique. You may see a mortgage company out there that has a guarantee, but they'll have 20 bullet points of what voids the guarantee. If they lose their job, if they buy a new car, everything in the book that they can think of voids the guarantee. What makes mine unique, that I don't know any other mortgage professional in my market or outside of my market that offers this guarantee, is this paragraph. This guarantee is valid even if the buyer loses their job, they incur new debt, funds come from an unacceptable source, credit score drops. If the buyer does anything to jeopardize their financing, my guarantee still stands. That is powerful. I have 3 small bullet points that it voids the guarantee if there's property or value issues, if the seller cancels the contract, or if the buyer backs out when I can actually get them a loan. Again, this is the second page of my pre-approval letter, which definitely helps me stand out in a multiple offer scenario. Now, after their consultation, my loan coordinator, Mark, will follow up with a list of supporting documents to move forward with their pre-approval. Once documents are provided, we will have a turn time on that same day or next day. And this turn time is very competitive in the industry, and it's fully underwritten. So again, on my $10,000 financing guarantee, I'm not going to put a guarantee out there unless they've been completely underwritten. Most mortgage companies do not underwrite loans. They don't have the staff to do it. There's such a small percentage of people that meet and talk about a mortgage that move forward and actually buy, for many reasons that's happening in the industry right now. Highlands Residential Mortgage, for my clients, pre-underwrite all of my loans. Now they are equipped with the information that they need to start shopping for a home. During this time, I am close contact with my clients on a regular client check-in emails. I also have a personal cards that get mailed to them every 3 weeks to let them know that I'm available if they need me. This is a benefit for my power partners. It keeps them top of mind as well. Now for the offer stage. In preparation for the offer, I will update their pre-approval letter specific to the property that they're making an offer on. I'll make a personal phone call to the listing agent to show strength in their financing. And of course, in this call, I make reference to the second page of my pre-approval letter with my seller financing guarantee of $10,000, which is not subject to the buyer's ability to secure financing. I know my guarantee is a reason that a lot of buyers' offer is chosen, because the listing agent lets me know once we're under contract. This is like having an extra $10,000 earnest money. Now, another benefit of my $10,000 seller financing guarantee, it provides confidence to my buyers with the ability to waive their financing. In this market, most buyers are doing that in order to just compete. Imagine waiving your financing if there were any doubt that you had ability to secure a loan. My buyers don't. They have confidence if they can secure a loan, because I let them know that my money is on the line just as their money is. Now, will I ever have to pay a $10,000 check? Absolutely, because life happens. They could lose their job in the middle of closing. Just like any other lender, if they don't have a job, when verification is done during the contract process, that loan is going to be declined. But I paid $10,000, so that's a one-off that would happen. Once under contract on a home with the seller, this is where a lot of my competitors are going to drop the ball. They have a deal and now it goes sideways. In this stage, we perform at the same level as we did from day one, the highest level of service. And again, being able to close in 2 weeks. Most professionals do not invest in the process or in a team, which makes things really fall at the end. I'm running out of time, so I'm going to make this quick. Also, the closing milestone emails that keep everybody in the process up to date and exactly what's happening so that we can have a smooth and on-time closing. Tina Mitchell, making a difference in families, one mortgage at a time.